Welcome everyone. Today we're discussing the actual bear market and all the topics that you have been deciding to comment the most towards my social media. So, before we're going to discuss all those important topics, do not forget to subscribe beneath, like this update and comment if you want to see some special content in general. I've had questions regarding the Wyckoff theory. I've had questions regarding head and shoulders pattern, and I've got questions regarding the death cross that we're going to have with the markets in itself. And I'm going to discuss these topics a little bit in the coming 10 minutes. But first, Wyckoff theory was done already. We've got the drop down. We've lost the support level. That was a very interesting and great call from the person in itself. So that's done. The event has passed. The head and shoulders pattern, I'm not really focused on that, given that that's usually just something that everybody is seeing, and when everybody sees something, it's usually not happening. Same as with swapping altcoins to Bitcoin to de-risk after the crash. That is usually not the best strategy, because swapping from Bitcoin to altcoins was actually the best strategy. Finally, the death cross, and I'm going to do that as the first one that I'm discussing here in the update in itself. We can see that Bitcoin is beneath the 100-day and 200-day MA. That is not a very bullish structure. That is not a sign of strength, but it shows that the moving averages are going to crawl towards each other in the coming weeks. Also because of the fact that moving averages are just lagging indicators. But right now, the sentiment is ultra bearish on Bitcoin, and we can see that in the price action in itself, in which every bearish argument is found there for further downside momentum, or because it fits your bias. I'm seeing it on my own YouTube and content as well. If I'm posting bearish content, I'm getting way more exposure than when I'm posting bullish content, which is the exact opposite of what I had with some altcoins previously, in which I was bearish on those, on Engine, Chiliz and Veracity, to avoid buying those, but I got blamed for being bearish. So usually when you're the opposite of the actual mass, you are on the right side of the trade, and especially when everybody is discussing one topic, it's usually not going to happen. So the death cross is going to happen here. We can't avoid that anymore. Well, we can actually, potentially, if we break back up quite soon, but that doesn't seem the case because of the lagging indicator that we have. However, the death cross is also based on this crash. We have lagging indicators, so this crash is actually fueling the indicators to make that cross in a few weeks of time ahead of us. Meaning that it doesn't really make sense to you to use that as an indicator or as an argument to do so. As a matter of fact, and I'm just moving forward a little bit, if Bitcoin is going to consolidate here, just like we have been doing after these crosses that we have been doing here in March 2020, but also previously in 2019, and we can have multiple examples. Even in 2013, we've had a dead cross like we have been seeing here. We've made this dead cross and we immediately flip back above. So the focus right now is on the dead cross in itself. But if Bitcoin is going to stabilize here and crawls back up, probably the moving average will do something like this, in which immediately afterwards we flip back above and we get the golden cross. So the topic right now is surrounded by the death cross, while Bitcoin is acting in support and the actual crash happened. So how is it going to benefit your strategy? It's not. It's just fitting your bias because you feel like you're losing money and you feel like you're going to lose even more money, and therefore we've got a bear market, which shows that bearish content gets the ultimate central point right now. And easily when we break back above certain levels, or when we hold support, we are going to fit that bias, or we're going to flip that bias. So if we look at this strategy or at the levels, the critical level that Bitcoin has to hold on to can be found between 29 and 32.5. That is just the support that we have to hold. If that holds and we make a compression period in this structure here, and we start to have a momentum in which we want to break to the upside, we might all of a sudden get towards this resistance zone. So we get something like this, break back above, and then we have the 100-day and 200-day MA becoming support again, and then the continuation of the structure happens. Because after that structure, we just get the golden cross. So my conclusion on this topic, on this part right now, is to not focus solely on the central point of view today, because it's just a snapshot of what is being discussed today. It doesn't really help a lot on the strategy. Then finally, the the head and shoulders pattern that we want to discuss here. If you use this neckline, and if you're going to use this breakdown, you have to measure this part, meaning that this high at 63 to 32 is about like 31k. So if we break this neckline, we're going to have a drop down towards 2k. It doesn't make sense. And people often forget that head and shoulders pattern are usually continuation patterns. So it can easily become the neckline here, in which we start to break upwards again. So stick to price action. Stick to making it easy for yourself in which you're looking at price action. And that's the sole basis that I'm doing as well. Even if you're going to zoom out and you want to look at the higher pictures of the market, in which you want to use the 21-week MA, for instance. We have been using it on Bitcoin solely. However, we can see that, and I assume that we should be doing it, we should be looking at the total market cap way more, because crypto is not only Bitcoin. And we can see that with the total altcoin market cap, we are acting above the 21-week MA still. We've just had a beautiful retest. We are consolidating right now, which is eagerly focused on continuing the momentum here, in which we might be getting a new run to the upside as long as the 21-week MA holds. Next, we can also see that it has been holding in 2017. We can also see that the total crypto market cap is trying to get back above the 21-week MA. Right now it's still fighting there, especially in the correction that Bitcoin is currently seeing, but we're trying to get back above. If we look at Ethereum USDT, we can see that Ethereum is just above the 21-week MA, and I have to use the version of Kraken, in which we can see that in the previous bull cycles, we have been staying above the 21-week MA with this asset as well. If we look at Ethereum on the 100-day and 200-day MA, we can see that we're still acting above those, meaning that the bull cycle is still lasting on almost everything in the markets at this stage. However, Bitcoin has a very negative bias and discussion because of the energy consumption right now, through which the moment that Bitcoin is going to bottom out, it seems very likely that we get a golden cross after the death cross, and that the altcoins will just continue pacing in their bull cycle as they are acting above those crucial indicators. So I hope you have enjoyed this update. I'll see you again tomorrow with a fresh new one, and do not forget to subscribe.